Recordings. Okay, take two. Welcome everybody to our investment sales Zoom session. We've done several of these now and think that they've been well received, and we've got some great properties that are going to be presented, and we appreciate everybody's attention who has joined us here today. And with that, we'll jump right into it because we've got some great stuff here to review and present. So our first property that we have on the docket here is from John Sesher with TRI Commercial in California. Is John on? You see him on the list there, Jonathan?
I saw him a minute ago. Oh, there he's on. John, you're muted if you're trying to talk. He's on the screen.
He's there, he's sleeping. I'll knock on the screen.
Yeah, and his speaker's off too, it looks like.
Yeah. Oh, well, let's go. You want to just flip to the next one?
Sure, we can do that. And then we'll go back to John. Well, we got another one from John. Go to
Text him and tell him he's silenced.
So I guess we'll jump to Francisco Navarro from Costa Rica. Francisco, are you on?
Yes, here I am.
Okay, great. The floor is yours.
All right. Well, this is an office warehouse property. The full complex is made up by 40 warehouses. We have a landlord which owns 4 of these warehouses. And the good thing, or the most interesting thing, is that all 4 have only one single tenant, which is a company that operates 4 different retail shops here in Costa Rica, which are, well, 3 of them are very Costa Rican, which are Spoon Fresh Market and AMPM, which are, Spoon is a restaurant and cafeteria chain, retail stores, and Fresh Market and AMPM are, imagine something like 7-Eleven or so, okay? And they also manage Taco Bell nationwide. So all the four businesses have their distribution center in these 4 warehouses. The current contract was renewed in 2021 for an 8-year period. I'm sorry. And the asking price today is of $2.6 million, which represents a cap rate of 9%, which is pretty good. For you guys to understand how does real estate is the accounting of the real estate is made in here in Costa Rica, there's a special regime for real estate which allows people to have a 15% of expenses and 15% of income tax due. And therefore, with the current monthly lease, which is on $19,000, whoever buys these warehouses will have over 194,000 of income at the end of the year. So I have placed the address over there. You just have to copy it and paste it on Google. And therefore you can have a look on where these warehouses are located, which is basically an industrial area here in Costa Rica called Heredia or Barrial in Heredia, which have many distribution centers and warehouses. So any of you who have any doubts or comments, just let me know.
Francisco, is a 9% cap rate typical for a property or an investment of this nature?
Not really. Basically, most of the cap rates in the industrial market here in Costa Rica are around 8%. So this is a good opportunity. Basically, what's happening with this landlord is that they are currently developing a project of over 400 acres, mixed-use property, which is going to have office, retail, and industrial market in the same project. So they need to capitalize that project. That's why they're selling this. Basically, it's a great opportunity with a 9% cap rate.
Yeah, it's a great cap rate. Any other questions from anybody that's joined us?
What's the industrial stock there? How many buildings?
In this precise project,
No, in the area. Like, for example, is it how many millions of square feet, or what's the?
yeah, I have the answer for that. Just give me 1 second. Let me just let you know. Okay, the industrial market here in Costa Rica as of now is, well, I have it in square meters. You have to multiply that by 4.2, no, 10.1 to make it fit. But currently it's 6,350,000 square meters. Let me just convert that for you. So 6,350,000. 165 to be more precise, times 10.3. That's going to be 65 million square feet, which is the current inventory of industrial market. And
And how old is the buildings?
this building is 15 years old, 16 years old, I'm sorry.
Oh.
The current vacancy right now nationwide in the industrial market is 5%.
Got it.
It's really good.
And the leases?
The
How they
lease,
expire?
yeah, they have well, as I mentioned, they renewed the contract previous year for an 8-year period. So there's still 7 years in contract right now. And it has a 2.5 annual increase considered, and they have been paying those 2.5 increases year after year.
So it's a single tenant building versus a multi-tenant building?
It's even though it's 4 different warehouses, they are all one beside the other one and has one single tenant.
Got it. Okay. So it was built for 4 tenants?
You can have up to 4 tenants, but as of now, it's one single tenant. Yes.
Got it. Well, that sounds like a great opportunity. Thank you.
Thank you.
Any other questions or comments before we move on? If not, we'll go to the next property, please. Joel Meyer or Ed or Dan? I don't know who's going to present this one, but
we are on. Thank you, Mason. This is Joel Meyer. I've got Ed Backer here with me. Thank you for the opportunity to present this portfolio. We've talked with a few CORFAC members on this project at our fall summit in Seattle. And I think a couple of those are on, but it's nice to be able to address the rest of the group. We're here in St. Louis, Missouri, as are these properties. The portfolio consists of 2 buildings. They're suburban office buildings, Class B, A- product, or better put, Class B buildings with recent renovations. The properties collectively consist of about 170,000 square feet. Of that 170,000 square feet, we're fluctuating on this number. I think we're a little higher right now, but we're currently showing in our offering memorandum 91% occupied, which is currently outpacing the St. Louis MSA office market by quite a bit. And of those current tenants, 34 in total, we have several national firms, a few local credit companies, large CPAs that just don't tend to move, and some long-term leases on both those local and national companies. Both buildings have had considerable capital expense put towards them within the last 4 or 5 years, including mechanicals, roofs, but things as well as aesthetic items that really drive tenants to the buildings. So an example is the first building, which is in Sunset Hills, which is kind of your veteran community for St. Louis, that it really has a lot of corporate influence because of the expensive homes in the area. The landlord, Bamboo Equity Partners, decided to put all new glass in the entire building. So they took the curtain wall, which was currently gold or previously gold, and put new thermal kind of bluish tint glass on the entire building. So it completely changed the look and aesthetic of the exterior of the property. There's it's interesting. These properties are properties we're very proud of. We've done the leasing on them for the last 5 years and now have the opportunity to sell them. The interesting thing with office buildings is I think most people are seeing this with interest rates. Things have really changed drastically in the last 6 months. We sold 2 properties very similar to these at an 8.1 cap about 6 months ago. And the market's telling us that opportunity doesn't so much exist. And we're listening to the market. And fortunately, the ownership group has a basis that will still allow them to sell the building at what the market would like to buy them for. So pricing guidance on these properties is in the low to mid $20 million range. So $23 million plus or minus. That's based off of about a $2 million net operating income. Anything you'd like to add, Ed?
No.
Okay. Yeah, these they're very easy buildings to operate. It's a bit anecdotal or editorial, but I've actually put my wife in one of these buildings and her business there. So that I think hopefully says something to any prospective buyers. But if anybody on this call has a large 1031 requirement, or somebody who just historically has done very well with office buildings, we can walk through every single tenant and or vacancy within these 2 properties and speak confidently to your client to better address any questions they might have.
And to recap, I don't know, Jonathan, if you're handling the slide deck, we put a couple pages of just some example tenant finishes in the building, in addition to common areas and things like that. A lot of these tenants we put in have received, $40+ in tenant improvement allowances. It's real beautiful space. The OM is on Real Capital Markets. We can get you to the landing page that has, the underwriting pro forma, more pictures, stacking plans. We've got this put into Argus so we can share that with you and your clients, and welcome the opportunity to discuss further.
Any questions from the group? Any buyers in the group? All right, that's it from us.
These are the kind of properties that I know I've been, it's been kind of my beating the drum for it, but the new investment platform that we're going to be launching here shortly, this going out on broadcast emails and being posted on our investment platform. All of the properties we're presenting, obviously, but this is a great opportunity, and the more exposure we can give to our member office properties is great. So thanks, guys. Appreciate it.
You're welcome.
Ian, you've got a property that you'd like to present, please?
Yeah, thanks. This one's in Ireland, trying to tempt the US dollar over here. As you might be aware, the dollar has now reached parity with the euro, so there's great value for anybody's clients who are tempted to come to Europe. But sadly, cap rates here are a little tighter than it looks like they are in St. Louis. So but this is again a similar story. It's a building we've been involved in for quite a long period of time. So we've been involved in the leasing, management, and the original acquisition. This is a refurbishment of a 1960s building. Clearly, as you can hopefully see in the picture there, it's been completely reskinned. There's new M&E. It meets all of the sort of environmental criteria that certainly tenants here and investors here would be very, very focused on. So the building has let up very well. It's located, it's a suburban building, so it's located in Sandyford, which would be generally perceived as the leading suburban office location in Dublin. The building's let up over the last sort of 12 months, so we're now 65% let, and there's RFPs out on the balance of the space. So the rents, we started off letting at $28.50 a foot. So rents here are charged per square foot per annum, which I think is similar to the States. All rents are on a sort of triple net basis. So that's the rent the landlord is going to receive. So we started off letting deals at $28.50 a foot, and subsequent deals have gone to $29 and $29.25. So it's demonstrated good rental growth inside the building. So clearly we'd be arguing there's a reversion, rental growth due on the earliest lettings. So we're also offering an underwrite on the few remaining vacant areas in the building, so that essentially we will give sort of 12 to 18 months of underwrite on those areas should the next landlord not be able to let them. So all of that is at a 6% cap rate. So that again, that's a net yield. So after investment costs. Thank you.
Any questions from the group? No?
No, that's a nice listing.
That is a nice listing, yeah. Thank you, appreciate it. We go to the next. Cole.
There you go. Thanks, Mason.
Yeah, you're welcome.
I'm an investor in this project. It's a pretty much a coupon clipper type deal. It's a 5 cap currently. New construction, 2 new tenants. The tenants are Eureka Burger. They're more of a West Coast theme use. And then La Popular is a new restaurant that's kicking off next to them, actually owned by the same parent company by a firm out of Mexico City, Grupo Carollo, which is a very, very well-known operator in Mexico City. So it's a straightforward high-end Class A retail building. 2 new leases in place, about 10 years apiece, and a 5 cap at 7.2 million. So a very, very nice building. The ownership group, one of the partners is Canelo, the boxer. So they're a very well-known group in Mexico. So and they're pushing in the United States, and they just bought Eureka Burger. Eureka Burger, I don't know if you guys have Lazy Dog restaurants, but there were 2 buddies that used to put their restaurants next to each other throughout California and different states, I guess. And I think they're in like 5 different states, but very, very high-end operators, very, very high-end TI. So very nice construction, just a Class A 7,000 square foot listing. So.
Hey, Cole, this is not the Lazy Dog, it's the adjacent property, correct?
Correct. So Eureka and La Popular, it'll be their first location in the United States. And with 4 more planned in California this year, but I think their operator, the parent company, has 27 different restaurants in Mexico City. And that operator bought Eureka Burger now. That's all I got, Mason. Thank you.
Yeah, no problem, Cole. Thank you very much. Next up is John Ederholtz. John on?
I am on. Hello.
All right.
All right. this property is kind of a bite-sized deal for some exchange buyers, 1.4 million or so. It's got some pretty attractive aspects. Safe Light's been operating there a while. The landlord responsibilities are extremely minimal, just roof only, not even parking. There's a lot of positive activity around there. There's a brand new Wawa next door. So most of us are familiar with that East Coast and Florida, really high-end QSR fueling concept. A new AutoZone across the street. This part of New Jersey is kind of in between Lehigh Valley and the distant New York City suburbs. It's technically part of New York, MSA, I believe. There's 2.5% annual rent increases. And so I just think for exchange buyers and people at this price point, it's a very interesting property with the operating history. They did a 10-year deal 5 years ago. We almost got them to renew early for basically nothing, but then they just realized they had no incentive to do that. It's controlled by our affiliate, so we know the property pretty well. So yeah, that's this Safe Light. I have a few more that I want to mention verbally that unfortunately just the timing that we just are greenlit to sell these properties. And they're pretty interesting, so to tune in. We've got a absolute triple net Firestone complete auto care in Hadley, Massachusetts. It's a really strong location, 10% bumps every 5 years, just under 5 years of lease term. The property owner is selling it now rather than taking a rent cut to get an extension, which Firestone would do. So I think that's a safe play, even though it's limited lease term. And there's just not a lot of absolute triple net properties out there like this. We also have a Tractor Supply in Charlestown, West Virginia, which is in the Washington, D.C. metro area. It's in that eastern panhandle of West Virginia. Tractor just renewed, so that's a 15-year deal, just under 15 years now. 5% bumps every 5 years, and that deal size is going to be just north of $4 million. So those are a couple of interesting retail. And then I have one more that we just took to market, but just went under LOI. So I didn't want to put it up here, but it's a single tenant industrial deal right outside of Milwaukee. So if you have a client that loves industrial, that deal size is, I believe, $3.5 million. So you could let me know if that is striking a chord, and we could kind of reach out to you if it doesn't get under agreement or if it falls out.
John, I don't know if you are aware, but I know Safe Light is a Columbus, Ohio based
Yes.
company, and they are a client of our new affiliate there in Columbus. So if you,
Yes.
okay, you're aware of that. Okay.
Yes, that came up at the last conference. Yeah, I am aware.
Okay.
Interesting connection. Yeah.
Pass that along.
Yeah.
Does anybody have any questions for John on any of the properties that he's presented?
John, the cap rate on the Tractor Supply, what kind of cap you guys looking on that?
Yeah, we're probably gonna take it out in the mid fives, and our expectations are gonna be upper fives. We know cap rates are increasing finally with even those desirable single tenant retailers like Tractor, but and we have a different one that's under agreement, still sub 6. The REITs are now over 6 cap, but there's still some exchange and investment, some all cash buyers keeping those cap rates kind of low.
I agree.
That's where we are.
Yep. Good.
Any other questions?
No, great.
Okay, we'll move on. Jeffrey West has a property.
I'm actually going to step in on this for the moment and then turn it over to Jeff. Guys and gals, I want to demonstrate how our network works and why it works, because this Taco Bell is actually owned by one of my clients in California. It is in Nevada. So I called up our buddies there in Las Vegas, and Jeffrey West has been incredible to work with regard to this property. We actually, I also sent another referral out to the guys in Orlando, unfortunately, that property, my seller decided to pull because we couldn't get any additional term. But this is a leased investment Taco Bell that I will let Jeff go into the details of how we first started marketing it through the traditional marketing and now where we are coming up on a 10X auction. So Jeff, go ahead and pick up the ball.
Yeah, well, Josh, your $100 Amazon gift card will be in your inbox soon, so I appreciate the positive comments there. No, it's been great.
I thought it was 200.
Okay, well, it's negotiable. Come on. Market's moving against us, Josh. We got to make it up somewhere. So and like Josh said, it has been a great opportunity to work with within the network, you know, on the execution here. And, you know, we have tough licensing laws here, so we're really careful about, you know, promoting it as a co-listing, but that's really how we're executing it, with Josh having obviously the stature and standing with the ownership as a longtime trusted advisor, knowing him, what did you say, 40 years or so?
Yes.
You know, so that's great that he entrusted us to work with his client, you know, on his behalf. And as Josh mentioned, we did take this out. I don't think we ever presented this on a call previously, because I think the prior call was around April. And we had probably taken this out towards the end of that month. Traditionally, we were marketing it priced at a 4 cap. As you may have heard, the markets have moved a little bit against us in the single tenant space and the capital markets. So that didn't necessarily get great traction. We had actually like 110 confidentiality agreements signed, but again, the ball was just moving away from us throughout that marketing cycle. And so initially they had pulled it off the market, I think July, August or so. And then they did, I think there was a shift internally, and they decided they wanted to come back to market and test it a little bit. And rather than go through another traditional marketing cycle, we wanted to get to a point where we had higher deal certainty and weren't exposed as much on due diligence through an escrow. And I suggested this, the 10X auction platform. I had actually previously transacted 2 different assets for Turnberry Associates through it, which weren't necessarily great fits for the platform, but I did like the transparency it provided to both buyer and seller. And I think in this instance, that'll be very important, especially in a market moving and adjusting as quick as ours is. And, you know, we do have some potential risk there on the asset too, that, you know, we might get someone that's emotionally involved to overlook as they're going through it. So quick overview on the deal. 2,900 square foot Taco Bell. It's in the southeast part of Las Vegas in Henderson, which is about a 20-25 minute drive from the Strip. The property was built in 2004, and the current operator acquired the property in 2015. They subsequently extended the lease another 20 years in 2016, which then will expire now 12/31/2037. So we have just over 15 years of remaining term. The lease carries 10% increases every 5 years. And then thereafter, there are 4 consecutive 5-year extension options with provisions that the rent cannot decrease, can only increase the fair market value. So there is a floor protection there for the asset, but it is an absolute triple net lease with 0 landlord responsibility. The operator is a 324 location operator across 5 states. 296 of those are Taco Bells in 4 states, making them one of the top Taco Bell franchisees, if not the top. And they're part of the foundation, as you can see in the notes there. I did put in the chat the 10X, the link that'll take you to the 10X website. So if anybody wanted to look at those materials or access it, they can do so directly through that. And again, I think, you know, with this, with the operator strength and everything there, this is a, you know, a very kind of rare opportunity for our market, especially again with the absolute net lease structure that really is a truly passive, you know, investment. Now, pricing expectations, of course, going through 10X auction, there is an unpublished reserve. You know, we would generally expect deals of this nature, even in this shifted market, to probably trade in that 4.5 to 4.75 cap rate range. You know, there is that fluidity through the process that even if the reserve is below that, you know, cap rate is below that cap rate, that there is that potential for the seller to also get emotionally involved and decide to meet the market. So if you do have a buyer that would have any interest in this, you know, I would definitely encourage their participation in the auction. The offering summary is available on the 10X website, and in their data room, we have the lease agreement, amendments, assignment. We've just posted the property condition assessment, the phase 1 ESA, and a few other items just are, in support. And then obviously all the other information with 10X. And I don't know how many of you are familiar, excuse me, with the 10X platform or have executed through that before, but they're obviously great exposure through that. And we're just on the front end of the marketing. The auction date's going to be basically a month from tomorrow. So November 28th is the start of the auction. And that would conclude by December 1st. Initial bid's 1.2 million, but that's really immaterial because, it'll jump by $250,000 probably for the first few bids anyway, till it starts to get interesting. Any questions from anybody?
Who's the operator, Jeffrey?
DRG Foods out of Sonoma, California. They're related to ANC Ventures. Their website's actually in the offering materials.
Got it. Okay, thank you.
Yep. And
Hey,
there is a
just as
1% co-op through 10X on the offering.
They
Also, guys,
Jeff, don't they own the Taco Bell on the Strip in Vegas?
They did. They developed the Taco Bell cafe or whatever that concept is. Cantina. Sorry, they did open the Taco Bell Cantina. They developed that. They've actually built, I think, another 18 locations or so, and then they've renovated a bunch as well.
That one on the Strip, I hear, is in the top 3 in the world.
Yeah, they actually tell me that it's the highest volume restaurant in their system. The one on the Strip.
Yeah.
So guys, I just want to say that again, this is why we are connected in our CORFAC system to be able to share and work directly with other agents and offices in other states and internationally. So I would encourage other people to just check this auction out. 10X was also one of our sponsors at our event. So, let's all try to participate here. If you've never seen it, it's kind of cool that people do get emotional when you're saying guys with a lot of money have big egos. I'm not going to let that get away from me. That guy's not going to get it. And they bid more than what they normally would have. So it's a cool situation to watch, participate in if you have a client. And this again is a great asset that my friend's family's owned for quite some time, and now time to move on. Thank you again, Jeff. Appreciate your help on this.
Thanks, Josh. Look forward to getting it across the finish line.
Thanks, Jeff. And Josh. Oh, we're going back to the top of the list here. So John Sesher, are you
I am.
there? Great.
Yes, thank you. Sorry about that. Having technical difficulty all week for some reason, but
No problem.
I appreciate it. This is a former Fuddruckers location at the very prominent and dominant community shopping center in Dublin, California. It is now occupied by the oldest Indian specialty grocery chain in the Bay Area. 7,000 square feet. They're paying $238,000 a year. Just under a 5 cap. It's a 238,000, as you can see, price is $5 million. There is a 3% annual increase starting in year 3, which is they're into the lease now for 1 year. They are actually, the tenant opened up the restaurant and the bakery immediately and are in for permit for their grocery component, which will occupy about 65–70% of the entire 7,000 square feet once they open the grocery component. So they'll have all 3 of those grocery, bakery, restaurant in operation within about 120 days. It's a 500,000 square foot shopping center. It's gone through some attrition due to COVID and some of the anchor tenants. And then Regal Cinema, it's their #1 location in Northern California, sits 150 feet away from the front door here. And Regal Cinema just went through a $7.5 million remodel during COVID, and of course they're open now. So it's a prominent area in the trade area. It's growing substantially. Lots of new residential also. It's a great site.
Any questions? Thank you,
Move on to
John.
the next one then. This is the brand new listing. Was formerly occupied by DaVita Dialysis, who moved out last month. Two-story facility. It's 11,788 square feet. Asking price is 10 million. Has 40 exclusive parking spaces with it. And South San Jose. So it's actually a rare location there. San Jose is 55 miles southeast of San Francisco. To give you an idea about that, high-tech area, medical, a great population base. The comps in the area are $750 to $900 a foot. This is priced at $848. I think there's probably a little room there. And the owner's a high net worth individual that owns a lot of different types of properties. Everything from almond farms to gas stations. So there is some motivation there to offload this. The DaVita Dialysis moved out because they needed a larger facility, almost 50% larger. So they moved down the street with I don't know, 19,000 square foot facility or something like that. But this would be great for an owner user, and it's also on the market for lease. So we'll update you if it becomes a lease investment.
Hey, I want to throw out that San Jose is where I'm sitting right now. And 2 days ago, some of you may have heard we had a little rocking going on. We had a 5.1 earthquake here with the epicenter here in downtown San Jose. So I'm alive, I'm well, nobody needs to worry. We're okay out in California. It's not falling into the ocean. But San Jose is a good marketplace, and this building is in a good location. So that's all I want to say.
People pay for that vibration machine.
All right. Any other questions for John on this property? If not,
Thank
we'll
you for
move
the
on.
opportunity. Thank you, Mason.
Yeah, thank you. Oh, what happened? Did we have one that, was that the last one, Jonathan?
Yeah.
But
we're
we had
gonna pull
a
up-
late entry, right?
I missed it. So we have one from Michael Stronger at Shindico, and I'm just gonna bring that up right now.
Okay.
Thank you. Can everybody see me? Hear me?
Yeah.
Yeah.
I'll bring
Okay.
it.
Thank you.
You want to start? Sorry, Michael, I don't know how I missed that, but I did.
No, that's okay. Is something up on the screen?
Not yet,
Okay,
but it will be in 1 second.
it will be, yeah.
Yeah, here we go.
Okay, that's a good start. So this shopping center is fully leased, and with a lot of recent development, it's about 281,000 square feet in total. And a lot of recent leasing activity. The weighted average lease terms over 11 years. The key tenancies that we've added in the last few years are, number one, the grocery anchor that is on the west end cap of the main strip here. They're on a new lease at Save On Foods, very strong Canadian chain, part of the Pattison Group. They're on a lease until 2041. And then on the south pad, you could call it, there's a provincial government-backed health authority lease in a 3-story, 52,000 foot building. That was a 25-year lease that also happens to come up in 2041. So those are the key anchors there, although there's a number of other mid-box players here, including a 40,000 foot fitness that was recently right-sized and renovated. Staples is on a lease until 2031. Best Buy comes up a little sooner, but they're at below market rent. And we've also got 2 new pad buildings that were just developed in the last year and are fully leased with a mixture of mostly medical tenants, service, and Dairy Queen. So if you look at the site plan, there we go. You get a sense of who's there. The entire facade of the building, of the main building, has been refaced. I can't even imagine what that would cost with today's construction costs. It was done a number of years ago and still looks fantastic. The pad on the west side in front of Save On Foods is a local credit union. So we've got this, it's just hit the market. There's probably going to be a bid date. The net income, it's around 5.2 million of net income. And guidance is in the $75 million range, which is somewhere in the high 6 caps, depending on what type of risk profile versus upside you plug into a 10-year cash flow. So we're very excited about this project because we've been working on it for over 20 years as the asset and leasing agents, asset manager and leasing agents. This was a failed interior mall originally with a Kmart on one side and a now defunct grocery chain on the other end, and a very bizarre small interior mall. And it's had many different redevelopments over the years, and it's been quite optimized now. The reason it's on the market is this is 90% pension fund owned, and the majority pension fund is simply looking at asset allocations and wants to sell. I can tell you that if Shindeco owned this or had majority interest in it, we'd be holding this a long term. It's a great asset. So we're expecting offers to come in. We've got lots of interest at this point. Obviously, the interest rate environment isn't in anyone's favor selling an asset of this nature. But it is grocery anchored, which is the gold standard now. And we've got also that government building, which is very desirable. And I think that's about all I can say unless anyone has any questions. The location, just to give you some context in Winnipeg of this particular asset, it's about 17 acres and it's at the corner of two very important thoroughfares. So Pembina Highway is South Winnipeg's most dominant northwest thoroughfare. It's where the rapid transit corridor is. It leads right from downtown all the way to the US border. And the University of Manitoba is only a few blocks south of here. That's our largest university with over 30,000 students. And Bishop Grandin on the south side is our interior ring road. So it's pretty much at Main and services all of South Winnipeg. So Staples and Best Buy and Toys R Us, for example, those are all stores that service the entire south quadrant of the city.
Looks like a great opportunity.
Yeah, sure does.
It's a very interesting one. We're pretty proud of what we've been able to achieve here. Every time the owners thought it was optimized, we brought something new to the table. But at this point, the only remaining upside that I would suggest would be on the Toys R Us side of the property. You can see that it's on the river, and there'd be an opportunity to potentially add some multifamily density there in the future.
Excellent. Any questions from anybody?
Package.
No?
Yeah,
Okay.
wait a minute.
Oh, yep, go ahead, Jeff.
How can we get a package on this? I'd like to actually present it to a group.
Just email me and we'll send you the package and the CA agreement. So it's mstronger@shindeco.com. We'll get it right out to you. And by the way, that euro versus dollar was interesting. I hate to say it, but the Canadian dollar isn't trading very well versus the US dollar right now either. It's at about 73 cents.
Ah.
All right. I think that concludes our property presentations, unless anybody who has joined us has something that they want to mention, possibly that wasn't submitted. We're always open for that. Does anybody have anything that they want to put forward? No? Okay. With that, we just wanted to touch on our new investment sales platform, which my understanding is will be launched here in the next couple weeks, I believe. And there will be emails going out to all of our membership outlining its capabilities, how to access it, how to utilize it, how to upload properties. That's going to be coming here shortly. I don't know if Jennifer, Diane, Jonathan, if you wanted to say anything more about the actual platform itself.
I know this was something as president that Mason really wanted to do, and it took a little longer than we thought, but you know, these type of projects are only as good as the information that's put into them. So like I said, or like Mason said, we'll be sending something out next week to everybody, letting them know. And then, you know, all of you, thank you for being on this call. And I would assume you would have a real interest in putting properties on here, because it's something that will be available to all members. But outside of that, I think that's it. Jennifer, unless you got something else to add?
Oh, I was just gonna say, it's one of the goals of the platform was to make it very, very easy to use. So it's a really straightforward system, and it's a great, way to index these opportunities and search for them by different criteria. And the other feature that's helpful is that an administrative person at a firm can log in and post these on behalf of any member within that firm. So it doesn't have to be done by you as an individual broker. It can be done by an administrative person and assigned to whomever is the contact in the firm for the opportunity. So that's a nice feature.
Yeah, and these are leased properties you're putting on there, right? And true investments, not empty buildings, just true.
That's the goal. Yes, because we have the build out platform for listing, property listings. This would really be focused on, well, Mason can answer that, but the intention was investment sales opportunities and haves and needs.
Correct. Absolutely.
And then I just like to know, we've had some recent backouts of contracts in St. Louis. I'm sure everybody else has been experiencing that too because of the interest rate hike. Do we, as a group, do we see the cap rates going up? Jonathan, what's you communicate probably more with anybody than anyone else. What's your thoughts from talking to all the houses?
You were kind of cutting in and out there, Gary. I was having trouble hearing what you said at the end.
I just like to get an overall feeling for the market cap rates from everyone here on the call. We at Intellica have lost some opportunities because of the interest rates increase, and we see the cap rates need to be going up. And I don't know if everyone else is feeling that, or is that just something unique to St. Louis?
No, I mean, that's all markets, by all means. I've talked with colleagues in other markets as well. I actually did a little bit of an analysis on that anticipates and predicts where the cap rates really should be based on the shift in debt. I can put it on screen if you want me to share it. We can kind of talk through it.
Yeah, love that. Thank you.
Let me see. Do I need a request control?
I don't know how to do that. I give you control.
I can stop sharing and see if that allows you to share. Oh, wait,
Okay.
yeah, there you go. Approve. Okay, sure. Yeah.
And then let me go to share. Give me 2 seconds here. I'm not as Zoom savvy as I used to be. Here we go, share screen. Give me 2 seconds. All right. Is everybody seeing that?
Yeah.
I can't. It's too little.
Let me zoom for you.
Thank you.
Give me 2 seconds here. That change anybody's view there?
There you go.
That's correct.
So what this was is I was looking at obviously where our 10-year treasury rates are. Now this is basically lagging. So the September data was published in October. So that's a look back. And what I'm looking at here is basically where the spread was between the 10-year Going back, we had a certain spread between the 10-year and where the loan constant and what the cash on cash was. And in essence, maintaining that spread. Now, I think that's probably an unreasonable assumption. I think that spread actually widens because I think the risk profile has actually increased over that time. But this at least gives some kind of an interpolation of where you think cap rates should go, based on that relation between where the loan constant is and kind of backing into where the return should be. And so what we're looking at then is the cap rate increase and what a percent of value decrease is. And so we're seeing values need to basically come down 20-25%. And that was based on the September numbers. I mean, we hit 4.15 earlier this week on the 10-year. I haven't seen it, the last couple of days, but we're not seeing lender spreads tighten up at all yet either. So I don't know. I mean, I don't know in your markets what you're seeing, but I'm just seeing a lot of stagnancy, a lot of buyers sitting on the sidelines, increase in amount of inventories on the market, which continues to put upward pressure on cap rates. But you don't have a lot of sellers yet ready to go to the movie and really ready to believe that, unless they're extraordinarily motivated for other reasons outside of just general market sale opportunities.
Well, that's great. Can you share that with us?
Yeah,
Thank you.
I'll email it to Jonathan, and then he can distribute to everybody.
Yeah, it's awesome.
That'd be great.
Yeah, we're seeing that also in our market.
I should have the October numbers probably within about a week or so, and then I can recirculate once I've updated for that. But I'm guessing then what we're going to be looking at, just kind of knowing where the spreads are and where the rates are, that we're probably looking then at about a 30% drop in value is where they need to be from where values were in, call it November, December at the end of last year.
So to be clear on that, you're saying this is what you think a rational buyer should do. You're not actually seeing evidence of the cap rates changing in the transactions. You're actually saying there's no transaction, so there's no transparency, but this is what a rational buyer would do.
Right, because when we still see brokers putting out retail multi-tenant deals at 6 caps in our market, and I mean, you've got negative leverage, 150 basis points on the loan constant there, if not 175, with the higher rates. So why would somebody come in and take a 4% leverage cash on cash if they're just doing a 50% loan to value, or possibly even a sub 4 if they're doing higher leverage than that? And you get to a point, and we were actually having a meeting just the other day with a group that invests in Florida, Texas, New York, Colorado, and Nevada, and they're actually putting money in treasuries on a short-term basis because with the inverted yield curve, they're getting a better yield there on a short-term, quote, risk-free hold than they would be putting it into real estate on a leveraged return basis. So they're shifting asset classes on an interim basis just to warehouse monies and to put monies on the sideline until they see some price discovery or some indication of where the bottom of that adjustment is. So yeah, there's no empirical data to necessarily, quote, support this, other than just a reasonable expectation of where, again, if a buyer was getting a certain spread in November over that risk-free rate, you would expect that similar spread to carry forward as far as what their risk premium would be for real estate, if not expand, again, because we've had obviously a lot more risk come into the economy in the last 3, 4, or 5 months than we did going back to when those spreads are that I'm using to kind of interpolate from were established.
Right. Yeah, I think, the rational, all that makes perfect sense. I think we'll see where it all shakes out, because the rationalness of some of this large pools of money hasn't always demonstrated itself over the last few years. Right. And there's different arbitrage, internationally. So everybody's waiting to see where this shakes out.
Yeah, and this was just some way to kind of estimate. We want to be able to skate to, get our clients to skate to where the puck's going to be, not where it is.
Yeah.
To use a Golden Knights reference. Sorry, Winnipeg.
That's a Wayne Gretzky reference.
But anyway.
That was a low blow.
That's a Wayne Gretzky comment, a quote.
But anyway, so that's again, just to give some guidance. I mean, we can obviously look back to where cap rates were when the 10-year rates were at this level and what the lending environment was, historically 12, 14 years ago, but it was obviously a very much more frenzied kind of environment. We were coming out of a much deeper, drop, at that point. with the market correction that was going on because we had so much overhang. So I don't know that the two necessarily mirror each other. And I'm not old enough to honestly have any kind of a perspective on what that mid-70s recession looked like and how that affected. But obviously that was pre, Tax Reform Act, pre so many things that I don't know how informative that is of the current market situation either.
Agreed.
Yeah, I think a lot of it will depend on product type. And if people think this is a short, shallow recession, then the spreads are not going to fully compensate. So there will be compression of spreads for a little while because they're still looking longer term and getting through it. So we'll see what happens. I mean, it's
Yeah,
gonna be
we
fascinating.
still see a widening bid ask spread right now in the market from where we're seeing, especially on offerings.
I know our lenders are pens down. I mean, we're seeing a lot of, instability from our lenders, and so that's a concern for us in the Midwest. And one of the things that I'm just curious about is if the banks start reappraising the properties based on this type of data, if people are going to be out of their covenants. And that's the kind of the last thing we want to see. But I know as a cash buyer, a lot of my friends and clients are sitting on the sideline just waiting to see what happens next year.
One of the opportunities the lender that provided some of this data had mentioned is he's seeing a lot of deals that are running out of interest reserve that can't roll to perm, that are it's going to force a sale. So that might be something to look for opportunities in your market of any deals that were maybe at the tail end of their development cycle that maybe wouldn't have necessarily any forbearance or extension opportunities available that would force a transaction because of the inability to roll to perm.
Yep, agree.
Just one thing to add, Michael, here in Winnipeg. We're seeing as mortgages turn over, there's a lot of short-term renewals going on. And the market is basically pricing in after about 2 years, 2 to 3 years, there's a prediction going on that the rates will come down again post-recession, I guess. So there's a lot of that kind of short-term renewal activity in the mortgage market that we're seeing. And we are now seeing some major projects stalled. Construction costs are at an all-time high. And with rates suddenly, just having tripled effectively overnight, some major apartment projects are now just on hold. The consensus also is that by next year, construction costs are going to come down because a lot of the inflation is based on hopefully factors that are a bit transitory, like labor. But if all these projects get stalled, there's suddenly going to be a lot of people looking for work. So we'll have to see if that bears out.
Well, this was a great time spent. Thank you, everyone, from my perspective. Thank you.
Thank you.
Thank you.
Absolutely.
Agreed.
All right. Well, Jeff, I appreciate you putting this up. This was not expected, but it's very educational. And as Greg said, who knows what the investor's tolerance is going to be, but if anything, it gives you a good gauge of how interest rates have affected value or perceived value from year to year. So very, very grateful for you going through and putting that up.
Sure.
And
anything else
Jeff,
that anybody else would like to add?
I was just going to say, Mason, we can throw this this chart, Jeff, onto the slide deck, which we'll share with everybody that was on the call.
Okay. Yeah, I'll shoot it to you right after the call.
Okay.
Hey, thanks, guys.
Thank you.
Perfect. Anything else? Well, I would just
an email last night.
No? Okay. Well, I just like to, somebody's talking in the background there. Just like to thank everybody for participating. I always take away something that I learned from these sessions, and it wasn't any different in this case. So thank you so much for everybody to participate. We'll be announcing when our next investment Zoom meeting is going to be held, and look for the announcement on the investment sales platform. We're excited about that, and that'll be coming out very soon.
Thanks,
Thank you,
everybody.
Mason.
Thank you, everybody.
Thank you.
Take care.
Thanks, everybody.
Yep.
Thanks.
Bye-bye.
Great call.
Bye.